you don't need income, you don't need anything.
Yeah.
That can come off as 100% finance, right?
Yeah.
Where it's like I can just walk in and be like, where's the money?
You want to buy investment properties, but you don't have no job? My man Eric, he got the solution for you. Hey, so Eric, thank you for coming on the channel the second time. Right now, a real popular topic is, what is a DSCR loan? Could you explain that to us?
Yeah, for sure. So thanks for having me, Nas. So DSCR loan, that's a big hot topic, as Nas was saying, because it's a relatively new investment product, right? And it's a way for lenders to qualify you versus banks that go off debt to income. So as Nas alluded to, you might not have a job, not great income verification, you don't have a real bankable profile. So what the DSCR loan does, it allows you to qualify based off the property itself rather than the borrower. So let me break down real quick DSCR and what it stands for. In real estate, there's a lot of fancy acronyms that mean simple things, right? Debt service coverage ratio, put that on there. DSCR, debt service coverage ratio. All that simply means is what you have coming in versus what you have going out, right? And what you're gonna come having in is your property cash flow, how much that lease is for, how much you're getting Airbnb wise. You might do a midterm rental strategy. How much income is that property generating versus what your mortgage is? And that's principal, interest, taxes, and insurance. And that's how you calculate DSCR. Cash flow over PITI.
Okay, so with the DSCR loans, right? If I come to you and I do it in my business entity, will it show up on my personal credit, the actual loan?
So the answer is no, right? So these are business purpose loans going to your LLC. I'm lending to Nas's business rather than him as the individual. Now he will still have to sign as a personal guarantor as an owner of his business, but none of these loans will show up on his personal credit report.
Okay, so none of them will show up on my personal credit, and this is why I like them. So I like to keep my personal credit clean. Like I think only debt I have on my personal credit is probably just my property, my house.
Right, your mortgage.
Yeah, my mortgage. But anything, I like to just keep it clean and do everything in the business, operate within the business. Now, I can come to you, have no job, but I have some money saved up. You'll base it off the actual property and the cash flow, and I can keep that as a long-term rental.
Correct. So I'll ask you for a couple things, right? I'll ask you for your lease if it's a long-term rental, or maybe some Airbnb statements. And the biggest thing for me is I'm trying to qualify you off what I said earlier of how much cash flow you have coming in. Let me bring up a real example, right? Say Nas is bringing in $2,000 a month from this property that we're in right now that he's gonna fix up and make beautiful, right? Long-term lease, $2,000 a month. His principal, interest, taxes, and insurance are only $1,000 a month, right? His DSCR is gonna be 2 because he's got a 2-to-1 ratio. Most lenders are looking for at least a 1 minimum ratio, and all that means is that your property cash flow can cover your mortgage.
So that's essentially all a DSCR is, that
That's
your
it,
property cash flow can cover your mortgage. As long as you can cover that.
You're approved.
You gotta make some cash flow too,
Well,
right?
yeah, you want to as an investor, right? But us at iFund Cities, we allow you to have a minimum of 1. So as long as it's covering it, you're gonna be good.
Wow, so as long as you're covered, you're good.
And most banks are at like 1.25 right now, so that makes a
Correct.
big difference, right?
Absolutely.
Like, so, yeah.
All right, so wow, you can just cover the mortgage. So Eric, all right, that sounds all good and dandy, but what determines the rate I get?
That's a great question, man. So there's 3 huge factors when determining the rate, right? One is that DSCR ratio like we talked about earlier. The higher it is, the better rate you're gonna get, right? The second thing is LTV, and what that means is loan to value. How much money am I lending you based on the property's value, right? So we can go up to 80% of the property's value once you get it appraised for a loan, but the higher leverage, the higher the rate. Some people look at like a rate and term DSCR where after they fix up this property, they just want to get their cash back out and go recycle and do the next one. So that might be a lighter leverage, say 60, 65% LTV. That's going to give you a much more attractive rate. And the third and final thing is what that credit score is, right? So we'll take up into account your credit score. The higher the credit score, the lower the rate.
So if I got a lower credit score, you'll do the deal, just I'm gonna pay a higher rate.
Correct, yep, and the minimum credit score that we'll work with on a DSCR loan is 640.
It's 640. Okay, guys. All right. So that's actually, come in handy, and I hope our viewers are benefiting. But what's the typical rate in terms?
Yeah, so let's talk about the loan structure a little bit, right? We're unique at iFund Cities. We're able to offer a 30-year fixed rate that amortizes over 30 years, and that's huge for property cash flow. A lot of lenders and banks are doing less amortization, and what that means is the life of your loan is spread out over that amortization table. So if we do a 30-year amortization, your payments are spread out thinner, meaning more cash flow every month for you. We also have some unique interest-only options where you're only paying interest for, say, the first 10 years, and then it amortizes over the next 20, which is a really creative strategy right now given where interest rates are at, and you still want to be able to cash flow in a high interest rate environment. So ask me about those options as well.
And that's big right now because I got really cheap money on this, but to increase cash flow, right? Because I plan to hold this for a very long time, but to increase cash flow, what I'm thinking in my mind is to go find 30-year money so I can stretch out those mortgage payments and I can cash flow more over the time, because a lot of my stuff is, I got 15-year amortization schedules. So, you know, I'm not cash flowing as much as 30 years, but I'm getting pay down. You know, so, you know, you just have to think about what's important for you. Like if you're trying to escape a job, if you're trying to live off your passive income, then that 30-year table will be more important to you, if that's what you want to do, because you want to increase the cash flow to get to your goal quicker, whether that goal be 10,000 a month, 20, 30,000 a month. How about this? I got one for you. You wasn't ready for this one. Okay.
I'm always ready, man.
All right. 1 through 4 units are considered residential, so you can do those. But what if I brung you a 7 unit?
Man, I got good news for everybody out there today. We can do a DSCR loan up to 10 units. So those of you guys that are playing in that small multifamily space, this DSCR loan still works and you're still gonna be cash flowing. So definitely hit me up on one of those.
All right, so for everybody who's looking at, like who's listening to this, if you ever wanted to get into multifamily, right now, a lot of their loans are coming due. People overpaid in the last few years. Stuff is gonna be going into foreclosure, etc. And they bought on small spreads. You don't need your traditional bank where you have to give 2 years tax returns. They have to go through your statements. They go through everything, and with a fine tooth comb, they want to know your blood type. You can go through him, and as long as it's cash flowing, or you know, he can give you the money to fix it up and the money to buy it, but as long as it cash flows, you can get into a 30-year loan with Eric, and now you have cheap money. Because the guy who bought it before you that went into foreclosure for commercial stuff, I want to say they give out like 10-year, 15-year amortization schedules, like they're not stretched out. So you'll get a 30-year and you can cash flow and you can keep that and build generational wealth. So Eric, wrapping this video up, right? People are going to want to get in touch with you. Can you give them your website and your social media to get in touch with you?
For sure. So this is the company name, iFundCities, all right? www.ifundcities.com. My Instagram will be in the link below. It's at Eric, E-R-I-K with a K, _IFC. Look forward to hearing from you guys.
All right, now listen, reach out to him. You just did a loan with my man Isaac, who's on this channel as well.
Yesterday.
Yeah. So you just did a loan with him, man.
We're gonna do a DSCR loan for him too. So he's gonna rehab a property, and we're gonna take him out on the refi with the DSCR. So
you can come to him to fix up the property. You can also come to him to do the DSCR. And again, it just goes based off the cash flow, man. So that's dope, bro. And listen, put your Instagram on the screen. Also, this is our second time of us having him on the channel. So I'm gonna put the first video next to me. So please click on that. I'm also putting it in the description. And hey guys, if you wanna know how to wholesale to get your money up, if you have no job or you have no income because you wanna start doing this, I'm hosting a free masterclass this Sunday at 6 p.m. Eastern Standard Time. The link is in the description. I'll see you then. Peace.